In today's video, I am going to show you the simplest and easy way to analyze, which is smart money concept. Smart money concept is so easy and it has 85% win rate. That's why I love using it. And in my next video, I'm going to teach you how to analyze using support and resistance. So let's begin. For you to use smart money concept, also known as SMC, is you have to identify breakout structures and change of character. And it's so easy. Once you master the art, it is so easy to do. So all you need to do is pick your tool, your polyline tool, then look at this. I'm just going to give you a practical example before we go to the chart. So you go, this is low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. What do I have here? I have series of lower low, lower high, lower low, lower high. So these are breakout structure. So they are breaking structures to the downside. If you notice, these are all breaking structures to the downside. So, but at this place, something happened. It broke to the downside and it broke to the upside. Once you have this, we also call it change of character. So there's a change of character right here. Why? Because this high was taken out. It broke structure to the downside and then it took out this high. So the moment it takes out this high, we know that we are no longer going to be selling, we will shift to the buying. So it was actually selling, downtrend means selling, uptrend means buying. Right now there's a change of character because it broke the high, the recent high. So what are we going to do? We are going to start looking for the opportunity to buy. So for the fact that it has broken recent high doesn't mean that you should start buying. So look at this, market is at this level. So what you're going to do is that you're going to wait for a pullback before you start buying. So market is still going to do something like this because the moment a level is broken, it will automatically reverse. So market is still going to do something like this. So market is going to do something like this. So pull back. So and it may do something like this. Don't just jump in. You have to have confluences because it may do like this. You think you want to start buying, but it may not stay buy. So what may happen is that it may still come down and you wait for inducement to be taken out before you start buying. So in that sense, you have to wait for a low to be created and a high to be created, which it did. It did something like this. It reversed, do as if it's selling, and then of course you are waiting for buy, not selling. So some other person might come and start selling here and it will reverse against them. So once you start buying, you will not buy. Wait for it to create a high and a low and takes it out before you can start buying. So this high it created is called inducement. It will make you to want to buy, to enter buy, thinking it to buy, and see it reverse and takes your stop loss because your stop loss will be below the recent low. So it will take your stop loss and then that is when it will now start buying. So you always wait for liquidity grab before you can enter a buy. Wait for liquidity grab, inducement to be taken out, and liquidity grab for you to. So for it to happen, it has to create low and high. So on this low lies the liquidity. So it will take it out, and if it comes and give you equal low, it's a trap. Do not buy. If it give you equal low, what we call double bottom. Double bottom, do not buy because it will do as if it will buy and it will reverse again. It will take out. So it will do that couple of times before it starts buying. So all you need to do is to wait for another change of character before you start buying, so, to be free from any form of losses. You can buy here or you can buy here. So you wait for it to break the high. So you see that it created low and it created high. Wait for it to take it out. It took the low out, it took the high out, it broke it. It did a little retracement before it now started buying. So this is the right place to enter, the very right place to enter. And here, if you enter here, it's okay, but the problem with here is that you might enter here and it may still want to push down. You may still want to push down, and then you will now, that could lead to so many loss. Even it can even blow your account, and you don't want that. So it's always better you wait and have patience for the right opportunity to show before you can take your trade. So let's look at example from the chart. So this is 4-hour time frame, and it's always better to do your analysis from the higher time frame. In that way you'll be safe. So you see that right here it was doing a market was going, yeah, this is a good place. It was going, yes, it's uptrend. This is a clear uptrend. Yes, this is a clear uptrend. So you see, market was doing series of higher high, higher low. See, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Before all this started happening, you know, it was on downtrend, and look at what happened. When it got here, it created a low and a high. So there was a series of breakout structures. So right here it went up, it created another low, it created another high. So but it refused to create another low. So what happened right here, it takes out the inducement right here, and then you see that it pulled back. It takes out the inducement, then it pulled back into this demand zone. It pulled back into this demand zone, and then it started buying. So the moment it pulled back here, it tapped on this demand zone, and then it started buying. So it bought, pulled back a little, tested that same zone, and then it started buying. Now started doing higher high, higher low, higher high, higher low, higher high. So you target the recent high, which was here. So this should be your take profit target, your first take profit target. You take profit here, and then you wait for a pullback, or after your take profit you wait for confirmation before you take another trade. So you see that it created another low, it broke it, and then it reversed. It took the inducement out, and then it pulled back a little, and then it started buy. That is it, and this is your second take profit. The next high is the second take profit. So it continued the same thing. You pull back again, lower low, lower high, break or structure to the downside, and then it took it out. Then it retraced. Look at it, retraced to the next demand zone before it started buying. It bought up until here. With this method, you can easily take trades, analyze your trade, and take trades. That's it for me for now. See you in my next video. In my next video, I am going to teach you how to use support and resistance to do your analysis. Bye for now.